As always, a quick disclaimer. Today's analysis is for educational purposes only. All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis. Here we have the Australian dollar, US dollar. The overall bias on this pair remains very bearish. Again, as long as price is contained below significant resistance here of 701.79 or thereabouts, then my bias is very bearish. What we have from a price action point of, well, first of all, I'll go through the levels. We have resistance here at 69116 or thereabouts. Through these candles here. We have support turn resistance at 67545. Again, support turn resistance through these two bearish candles here. And then we have support turn resistance at 66740. Support through here, and then resistance inside bar setup here. And then of course we have the recent low acting as new support at 64692 or thereabouts, just about here. As I'm recording this, you can see this price here. That would be probably a reaction to some news event, something like that. We don't trade the news, so this major capitulation in price is of no concern to me at all. From a price action point of view, what we are looking to take advantage of course, is the long-term downtrend in this market, in this pair. So we are looking to enter short somewhere around this 66740. Given the fact that this inside bar setup just here really was a catalyst for breaking through previous support and then heading down to recent low, new support, or in fact this 67545 area. So we're looking for a sell signal, looking for a retrace. We'll take our time at somewhere between this 66740. So this here would be what I would call a sell zone, or even better, a sell zone between 69316 or thereabouts and the next resistance area 67454. So from a price action point of view, we're going to bide our time. We'll take full advantage of the dominant downtrend in this market, but we'll take our time and we'll be certainly retargeting the most recent event area, recent support around the 692 area or thereabouts. I'll make that decision should our signal present itself. But for now, the bias is bearish. I see no reason not to take a bearish stance in this pair at all. So we'll just bide our time, wait to enter somewhere around here, or preferably resistance areas here. Here we have the EURJPY. My bias in this pair is bearish. Again, as long as price stays contained below long-term resistance here at 122837 or thereabouts. We have previous resistance here at 121323. We have resistance here at 119892. Remembering it's not an exact pip count, they are areas only. Through here, this beautiful looking bearish pin bar, and here we have support at 118565 again or thereabouts through here, and then of course we have recent low or support here at 117046 and previous support here at 115846. So they're the relevant areas. My bias is bearish, as I said, as long as price is contained below this significant resistance area up here. What we can see has happened is price is short term at least in a range bound zone between 118565 to 121323 or thereabouts. So it's just been contained in that area, moving sideways primarily, certainly over the short term. This support here, as I'm talking to you today, this price action signal doesn't mean too much until the end of New York close, because I trade the end of New York close. But should we see a close below this support area, then we would be looking to take advantage of that if in fact a sell signal present itself. Conversely, of course, should price close below this and then retrace back up to this 119892 area, which for me is significant, then we'd be preferably looking to short around this area here based upon a very significant sell signal that we are looking for, and we will retarget certainly down here in the first instance around the 117046 or even further down to this 115846 area. So again, it's a wait and see game right now. Obviously today, as I'm talking to you, the 9th of March, prices are reacting quite violently. I'm not sure why that is, nor do I care, but I'll wait for a close of end of New York close over the course of tomorrow or even the course of next week, and we'll see what develops here. But I'm certainly looking to short this pair if in fact we get a signal at previous support or again at previous resistance. If we get a close below the support and then we get a retrace, and then that's the preferable situation, because that would mean the support here has been nullified if we get a close below it, and we'll open the floodgates should we get a retrace back to. So that's my bias on this pair. We'll wait and see how it plays out over the coming days, coming weeks, but certainly my long-term bias on this pair is bearish. Here we have the Euro USD. The overall bias on this pair is bearish, as long as price stays contained below this 1.140 area or thereabouts. You will see that this has been resistance, long-term resistance, for about a year or so. So as long as price is contained under that very significant long-term resistance, the overall bias is bearish. However, the short-term bias is bullish. So we have, I'll just go through the relevant resistance or event areas. We have resistance up here, long-term resistance. We have previous resistance at around this 112380 area. We have resistance turns support, which I'll explain in a moment, at around this 110930 area. And then we have previous support at 109886, and of course the recent low acting as previous support at 107819 or thereabouts. So obviously we had this recent low. You can see here we had this here, which has resulted in price capitulating back up. That's obvious. Price then continue to go through previous support here at 109886, again through this bullish pin bar form, and price continue to capitulate back up until we have this significant inside bar set up just here. Very difficult to trade, in fact almost impossible to trade, but this inside bar set up just here is significant. It's the formation of this inside bar setup that catapulted prices through previous resistance here at 11789 thereabouts. You can see the previous resistance here, here. This inside bar setup formed and of course capitulated prices up. It also kept on going up through previous resistance here and here, through the 112830 area, and heading its way up to, as I said, recent resistance of 114140. So my bias, short-term bias, is bearish on this pair. As you can see here, this resistance area has now turned into support. So resistance, resistance, resistance. We have short-term support through, again, the formation of this inside bar, these two pins here. This is acting as short-term support, as is this 109886 area. with this pin here, which was previous support through these areas here. So from my perspective, we'll be looking to take advantage of this short-term uptrend. We will certainly wait for price to come down to around about this recent support area here of 109.37, or indeed this 109.886 or thereabouts. So if prices comes down to this area and we get a significant buy signal, then we'll take advantage of that, and we will retarget back up here recent resistance. This resistance here has been nullified through this support here, so that would be our initial target, 114.140 or thereabouts. So conversely, of course, if we get a close above this 114.140, then we'll reassess this pair. But for now, as long as price stays contained, the bias remains bearish, and we'll simply wait for a buying opportunity to allow us to buy on weakness. Again, around this 109.37, this area here is significant, or in fact down here. So that's my bias on this pair for the moment. So we'll wait and see how this plays out. But again, just to repeat, if we do get a buy signal around these significant areas here, then we will certainly be taking advantage of it and retargeting back up here to long-term resistance of 114.140. Thanks. Here we have the British Pound USD. My bias on this pair is neutral. I did have a slightly bearish bias on this pair based upon this choppy sideways movement here, and it broke below previous support here through this pin bar, which failed. So my bias is now neutral on this pair. We're essentially trading in a range bound zone between here and here. So between 132046 or thereabouts and 127697 or thereabouts. So it's quite a large range bound zone. So what we're looking to do as traders, we have a couple of options here. We're going to wait for price to present us a signal to either go short, should it be rejected at distance here at 132046, or go long if price presents itself here at 127697. Now we got stopped out of this pair. I did place a sell order at this pair based upon this failed pin bar here, because we had a close of this range bound zone that failed to materialize. That doesn't bother me at all, but we'll take full advantage of this. It's quite a large range bound zone, so we'll take full advantage of this. So we will wait again for a price action signal either to sell as long as price stays below this resistance area here and we get a very, very significant sell signal, or of course if we get a very significant buy signal at this previous support level here, which has been rejected. So what's happened over the course of the last week, we have this inside bar setup here, which was really kind of a counter trend inside bar setup, and because it was slowly chopping downwards and did break previous support. That's why we entered the market based upon the bearish pin bar. But nevertheless, an inside bar setup has formed, cataboling prices higher. So we'll wait to see what happens between these two zones here and here. But certainly we will be trading this range bound zone. We don't often trade range bound zones. They have to be significant, and this is a significant enough range bound zone to trade them. So I don't have a bias one way or the other. It's been very choppy, very sideways, but again, we will take advantage of a sell signal at a high here of the zone, or a buy signal at the low of the zone until a dominant trend forms, and then of course we'll take advantage of the dominant trend. Cheers. Here we have the New Zealand US dollar. The overall bias in this pair is very bearish. It remains bearish as long as price stays contained below long-term resistance here at 67515 or thereabouts. The next resistance area we have is this 64895 again or thereabouts through here. In fact, we also have resistance here at 64500. So this area here is a resistance zone between 64500 and 64895. This area here is a resistance zone. So, which is previous resistance over here, of course, and that has been reconfirmed. So what we have is we have support here at 63113 again, or thereabouts, and that turned not necessarily resistance, but we did have this nice looking inside bar bearish pin bar setup form, which was the result of price capitulating back down to the recent low here of around the 62038 area, which was previous support and support here. So they're the levels on the chart. We entered the market, we shorted this market based upon this sucker setup just here, which I teach my clients, which formed an event area, previous support, that failed to materialize, which I have no problem telling you guys. So what we're looking to do, we are certainly looking to short this pair, but we will certainly wait for a price action signal based around previous resistance here or here to allow us to sell on better strength, and we certainly will retarget this support area here of around the 62038. So it makes no difference to me that we took a 1R loss based upon this structure here, which was a feature. It just didn't work out our way. We will look to take advantage of what the market offers up. So we're looking for a retrace, essentially, back up to this level here or this level here, and we're going to take full advantage of that and retarget down here around the 62038. Cheers. Here we have gold. My bias on this pair remains bullish as per previous analysis. What we have here is a new high, which is obvious, which is a new resistance at around the 1688, 1690 area. We have previous support at around 1563 and again at around 1515 area. What has happened, of course, price has capitulated to this recent high based upon this huge inside bar setup. That's impossible to trade, but that was a catalyst from a price action point of view for price to retargeting, or to re-hit, if you wish, the most recent high. So from a price action point of view, as traders, what we're looking to do is to take full advantage, clearly, of this upward momentum. So we're going to wait to buy on weakness, and we're going to wait for price to retrace back around this support level here of 1563 thereabouts, or this 1515 thereabouts. I don't care how long it takes to wait to do that, but we will certainly retarget back up here around the 1688, 1690 area. Should in fact we get a buy signal, it would have to be a very significant buy signal at this level or even lower. Then you might think that this recent event area here, which is where my clients and I took our take profit last time around, you might think that has something to do with your take profit area. That's now been nullified through this huge bullish candle here, so that won't be our take profit target. Even if we should enter here or here, our take profit will certainly be up here at the recent resistance, which has been tested time over the last 3 or 4 times. So that's my opinion on this pair, on gold. We will be going along at some point, I would think. It's just a matter of wait and see game until we get a very significant buy signal at an event area that conforms to our trading edge, and then we'll take full advantage of it and wait and see how it plays out. Here we have the US dollar Japanese yen. Clearly I have a neutral bias on this pair as I'm talking to you. We do have a false breakout here at previous resistance at 110216, which created a new high of 112141. This was purely a false breakout. We do have previous support here at 110393 turned resistance, so support, all this area here, support, previous resistance, new resistance here. This is significant. This area is significant through this resistance here. We do have again a previous support through here, here, and resistance through here. We do again have previous support here. The charts, you will see this area here is significant weekly resistance around the 106.586 area, and then of course most recently we have support here down the around about the 104.487 area or thereabouts. So from a price action point of view, it's a wait and see game on this pair. Obviously today, as you can clearly see on your markets, price has been, on this pair at least, capitulating back down. So there's a lot of volatility going around at the moment. For us as long-term traders, we will look to take advantage of what's happening in the market here. And if we get a price action signal around this previous support here, turn weekly resistance, or even here, it has to be significant, sell signal, then we'll take full advantage of that, and we will certainly retarget in the first instance this support here, depending upon what the New York close today does of this price action movement as I'm talking to you. But for now, there's a neutral view. We will be more than likely looking to short this pair just based upon the current movement of the market through this area here, but it has to retrace at a significant event area, and that would be around this 106, again to repeat myself, 586 or even higher to retarget this area here. Nothing to report necessarily on this pair, but it is on my watch list, and I will be looking to short this should in fact we get a very significant, it would have to be significant, perhaps in the form of a pin bar or in fact a sucker setup, which I teach my clients, at here or here, or potentially even higher would be great. But we'll see what happens between these three key levels to indicate whether we should be shorting this pair or in fact stay out of the market altogether.